Alright, picture this, you've got some cash sitting around, right? Not enough to buy a house, not enough to retire on, but enough that you're thinking, hey, maybe I should do something with this. You've heard about these fancy online brokerages, places like M1 Finance, promising slick interfaces and easy cash management. They're talking about high-yield cash accounts, FDIC insurance, all that jazz. But here's the real question, the one that keeps you up at night. Is it actually safe? Like, really safe? Because let's be honest, we've all seen the headlines. Banks failing, markets crashing, and that nagging feeling that maybe, just maybe, your hard-earned dollars are just a digital blip away from vanishing into thin air. So, is M1 Finance's cash account a safe haven, or just another tempting mirage in the vast financial desert? That's what we're diving into today. Now, before we get into the nitty-gritty of FDIC insurance and the specific mechanics of M1's cash account, let's take a step back and understand the broader landscape. The digital age has brought us incredible convenience, right? We can order food, book flights, and manage our entire financial lives from our phones. But this convenience comes with a trade-off. We're putting our trust in algorithms, in servers, and companies that, frankly, we don't always fully understand. And when it comes to money, trust is everything. We're not just talking about numbers on a screen, we're talking about our livelihoods, our futures, our peace of mind. So, when a company like M1 Finance offers a cash account with attractive interest rates, it's only natural to be skeptical. So, let's break down M1 Finance's cash account and see what's under the hood. First off, M1 Finance isn't a bank. They're a brokerage firm. This is a crucial distinction. They don't hold your deposits directly. Instead, they partner with FDIC-insured banks to offer their cash account feature. Here's how it typically works. When you deposit money into your M1 Finance cash account, those funds are swept into accounts at one or more of their partner banks. This sweep process is what allows them to offer FDIC insurance. Now, FDIC insurance is the bedrock of safety for most American depositors. It guarantees that if a bank fails, your deposits are protected up to $250,000 per depositor, per insured bank, for each account ownership category. This protection gives us a sense of security, knowing that even in the worst-case scenario, our money is safe. But here's the thing, the devil is in the details. Just because M1 Finance says your cash is FDIC insured doesn't mean it's automatically foolproof. We need to understand the specifics of their sweep program. For instance, how many partner banks do they work with? The more banks, the better, because it allows for broader FDIC coverage. If they only use one or two banks, you are limited to the $250,000 per bank limit. Also, how quickly does the sweep occur? Is it instantaneous, or is there a delay? A delay could potentially expose your funds to risk if something happens during that period. And what about the fine print? Are there any hidden fees or limitations that could affect your coverage? It's crucial to read the terms and conditions carefully to understand the full scope of the agreement. Now, M1 Finance, like many other fintech companies, has evolved its offerings over time. They've added features like M1 Plus, their premium subscription service, which often includes higher interest rates and additional perks. But with these added features, it's essential to stay vigilant. Is the increased interest rate worth the potential risks? Are there any changes to the sweep program that could affect your FDIC coverage? Another crucial aspect to consider is the overall financial health of M1 Finance itself. While your cash is technically held at partner banks, the stability of the brokerage firm is still important. If M1 Finance were to experience financial difficulties, it could potentially affect the accessibility of your funds, even if they are ultimately insured. This is where due diligence comes in. Researching the company's financial history, its leadership, and its overall reputation is essential. Are they transparent about their operations? Do they have a solid track record? And let's not forget about the ever-present threat of cyber attacks. In today's digital world, no financial institution is immune to hacking and data breaches. While FDIC insurance protects against bank failures, it doesn't necessarily protect against losses due to fraud or cybercrime. This is where strong security measures come into play. Does M1 Finance use robust encryption and multi-factor authentication? Do they have a system in place for detecting and preventing fraudulent activity? It's also crucial to practice good cybersecurity hygiene yourself. Use strong, unique passwords, be wary of phishing emails, and keep your software up to date. Another point to consider is the opportunity cost. While a high-yield cash account can be attractive, it's important to remember that it's still a relatively low-risk, low-return investment. Compared to stocks, bonds, or real estate, the returns are generally modest. So, is a cash account the best place for your money? It depends on your individual financial goals and risk tolerance. If you're looking for a safe place to park your emergency fund or short-term savings, it can be a good option. But if you're looking for long-term growth, you may want to consider other investment options. And let's not forget about the competition. The fintech landscape is constantly evolving, with new players and new products emerging all the time. It's worth comparing M1 Finance's cash account to other offerings from competitors to see if you can find a better deal. Look at the interest rates, the fees, the FDIC coverage, and the overall user experience. Don't just settle for the first option you come across. Furthermore, it's important to understand how the interest is calculated. Is it simple interest or compound interest? How often is it paid out? These details can make a significant difference in your overall returns. Also, consider the tax implications. Interest earned on a cash account is typically taxable. Understanding the tax consequences can help you make informed decisions about your investment strategy. And speaking of informed decisions, it's crucial to stay up to date on the latest financial news and regulations. The financial landscape is constantly changing, and what's true today may not be true tomorrow. This is where financial literacy comes into play. Taking the time to educate yourself about personal finance can empower you to make better decisions and protect your financial well-being. So, is M1 Finance's cash account safe? The answer, like most things in finance, is nuanced. It offers FDIC insurance through its partner banks, which provides a significant level of protection. However, it's crucial to understand the specifics of their sweep program, the company's financial health, and the potential risks associated with cyber attacks. Ultimately, the decision of whether or not to use M1 Finance's cash account is a personal one. It depends on your individual financial goals, risk tolerance, and comfort level. Do your research, read the fine print, and make an informed decision. And remember, no investment is entirely risk-free. With that said, thanks for watching, and until next time.